Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for checking out the Market Chameleon pre-market show with myself, Will McBride, and the main man, Dimitri Parkmonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen here. So anyone join us for the first time, if you guys have any questions, you can put those in the live chat on YouTube. Will's watching them. He'll read them back to me. If you want to come on a show and ask a question directly, we also put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get to Zoom, click on the button, raise your hand. Then you don't have to turn on your video camera, but you will be able to talk live. Everybody will hear you. And you could ask your question that way. If you want to ask questions about data, Market Chameleon tools, strategies, if you want to come on a show and discuss things that you've been doing that are working out for you, that would be great. If you want to come on a show and you saw something unusual and you want to discuss that, we also appreciate it. That will benefit the rest of the community. So those are two ways to ask the questions. While we're waiting for any questions to queue up, I'll start going over the pre-market report, maybe get some insights, take a look at Netflix, what's going on there prior to earnings. And if you have questions, we'll stop me and we'll take those. And I think you're on mute, but we'll continue. So
Perfect.
These are...
Yeah, that's perfect.
Okay, thanks, Will. So this is the pre-market report. These are stocks trading in pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. See 105 stocks made our percentage gainers list, 33 on the decliners. So from this perspective, looks like we're setting up for more bullish bias at the open. I'm going to filter out this list to see what's going on in the S&P 500 stocks. So this way, we're going to take out any small cap stocks, closed-end funds, ETFs, leverage products. We'll take all those out just to focus on S&P 500 stocks. To do that, I'm going to use the filters above in ETF. Up here, by dropping down this filter, I get a list of ETFs and select SPY, which is the S&P 500 ETF. And we'll filter out that list for S&P or SPY holdings. So here we see 20 stocks made our percentage gainers list, 3 on the decliners. So also from that perspective, we're looking like a more bullish bias at the open. If there are no questions, Will, maybe you mentioned Netflix. I think they're reporting earnings today after the market closes.
Yeah, no questions coming in, and Netflix is after the close today.
Yeah, so let's take a look at that. Put up Netflix here. So we could see here, today after the market closed, Netflix is going to report earnings. And maybe what I'll do is take a look at it from just a fundamental perspective, because the stock is down significantly from its high, right? So we got, just in the last 52 weeks, stock was $700. Now it's $193 in pre-market. Closed at $190.92 yesterday. So huge drop from that 52-week high. Let me just show you here the trading stats. So on the trading stats, we can see here, year to date, Netflix is down 68% versus S&P 500, 19%. Even on a 3-year basis, right, Netflix is down 41% versus S&P, SPY up 33%. And if we go out even further out, 5-year basis, underperformed. Netflix up 4%, versus S&P 500 up 66%. So maybe here also lesson is that fundamentals eventually catch up, right? If that's the case here. So take a look at Netflix from a fundamental perspective with their earnings. And I think what people will be seeing is how they're going to grow their revenue and their business at this point. So let's take a look at the most recent one. So I'm going here, fundamentals. Let's start with the income statement. And here I'm going to go to their quarterlies. So this is a basic income statement, right? So we didn't want to fill it up with too many things, but let's look first at their revenue growth, right? So what are people looking at? What are they potentially getting spooked by? So I'm going to take a look at revenue growth. And a lot of times, if your revenues growing, the markets will reward you and forgive you for not having huge profit margins, because they could perceive it as you're foregoing today's profits to grow your revenues, to grow your market share, to acquire customers. So let's just take a look. Oops, I didn't do the growth. Hold on. Why is this drop down not? Hold on a second. For some reason, I am freezing up on my computer here. Let me refresh my screen here. Sorry, I don't know if it's my computer or... Can you hear me well?
I can hear you, Dee, but I'm having a problem with my internet connection, but that wouldn't affect you, obviously. We're in different locations.
Yeah. Let me just try to start over here. All right, let me just start over here. Don't know why. I think my internet connection right now is really slow. And let me try it again. Let's go to the income statement, quarterly, year-over-year growth. All right, so now we're looking at, this is quarterly year-over-year growth. So if I come back here in time, kind of see like Netflix revenues have been growing at a pretty healthy pace in the high 20s, right? Dropped a couple times, mid 20s, year over year. So now, like over here, they kind of started slowing down, right? Last time, 10%. And that's kind of what I think now the markets are looking at. Is the growth, is it going to be slowing down, or are they kind of maturing? Is it going to, come down to maybe same levels as the rest of the S&P 500, which might justify reevaluation. And we'll have to hear from them. I think the last time they reported earnings, they said that, one of the things that they might do is enforce rules that you can't share your passwords. So imagine that will give them a bump potentially. They also talked about creating like an
I think the other problem, their last earnings was I
think Russia, they exited, had some impact on it. I got to read it, but there's a lot of competition now, right? It's so I think that's also the main thing people are looking at. Hulu is growing really fast. The Amazon has a service for streaming. I think Roku is going to start creating their own original content. You have HBO. So a lot of content creators get into the streaming business. That could also squeeze margins, and you have a lot of competition now in that streaming space. So look, this declining, before we look at like potentially where would we value Netflix, just want to take a look at what's going on in the most recent history. So we do see that the rate of growth has been declining, right? That's evident here. We can see here from this quarter on. Could be also just they're a benefactor from the stay-at-home economy, and it's coming back in. Another thing is, let's take a look at their gross margins and operating margins. And here's their operating income. So these, I changed it as a percentage of revenue. So basically, this is their operating profits for every dollar of subscription they sell, whatever it costs them, to produce that service. This is the percentage they keep. So 25 cents last quarter for every dollar they sold, they kept as profit from their operating margins. Okay. And here I'm just looking at the history of it, and it fluctuates, right? It's not steady. It's not like, when Microsoft sells software, it's always like just high margins, pretty steady. It does fluctuate, drop to 8% here, up in the mid 20s, high 20s. If we go back here in history, we could see that it does jump around, right? It's always positive, which is a good sign, but it does jump around. So it's just letting us know here that, that even though, and we'd have to go look at it, but their subscriptions were growing, why is that operating margins jumping around so much? Like what's going on there? Because you would think like their subscriptions, from what I know, they've always, it's basically the same price every month, and sometimes they've even raised it, right? So you'd think this would be a little bit more steady. I'm gonna leave here, and I do see, that their enterprise value has been dropping as well. So those are just a couple observations here. Slow in revenue and operating margins are jumping around. I'm going to take a look at the fair value. So this is a simple calculator, just to kind of give us an idea, like where would we, potentially value Netflix relative to the rest of the market. So here, that's the implied value, that's the market price. And let's look at the assumptions here in our calculator. So we give it an operating margin of 19.5%. The reason we did it is that's where Netflix guided, that they said their operating margins would be around 19.5%. So we plug that into our calculator, and that compares to S&P 500, 15.5%, which was where the operating margins were the most recent. Revenue growth, we gave Netflix of 9.7%. The reason, right here in the notes, that's where Netflix guided, right? Netflix gave us guidance, 9.7%. So we plug that into our formula, and we're going to compare that to say the rest of the market's going to grow with revenue 7.3% on average year over year for the next 5 years. And we did that because that's where the last 5 years it's been growing. So I'm going to just keep using these last these basic assumptions. That would give an implied value of Netflix 216. If we move that in a little bit, what will happen? Let's say that their revenue growth, I'm just going to tweak it a little bit, and let's say that they're going to grow it at the same pace as the rest of the S&P 500. So let's give them the 19.5% operating margins. What if we tweak it and say that they'll grow at the same pace as the rest of the market? In other words, their revenues are not going to their revenue growth is not going to outperform but just match it. Let's recalc. So that brings it down still to 202.64. We're here at 190. If we bring in their operating margins more, let's say to the 3-year average, you see I'm just tweaking just to see, you have to give it an assumption, right? So if I'm changing the assumption, 17.3%, let's say their operating margins drop from competition, then recalculate that. So that will drop it below today's market price. So you can see here, depending on what assumption you want to give it, and it's very hard because it does jump around. And we do have competition from like a bunch of places now coming in. Disney, Amazon, then other players like Roku, HBO. So that's probably something we'll hear from them today. But I think that what I'm trying to also show is if we just use these fundamentals and assumptions, we could see that, right now, based on these, we're nowhere near that 700. So if there are no questions coming in, I could stop right there then.
We did have a question about a calendar put spread in Netflix that Lauren was looking at into these earnings.
Okay. Did he say, I'm going to go to the options chain here. Did he say which calendar spread he's looking at?
Yes, he was looking to sell the July 185 puts and buy the August 185 puts. July 22nd.
Right, so I'm on July 22nd. So you're selling the 185 puts. Let's cue that up. So over here, I'm going to click on that. That's going to, I think my internet here is slow. Hold on a second. Okay, July 185 put over here. And then I'm selling that and buying which one? Will?
The August 5th. Yep, the August 5th 185 puts.
This one? Okay.
Can you hear me?
So, yeah. So here I'm loading it up. Right? July 185 put, selling at 1180. We're then going out, buying the AUG 185 put at 390. Right? So you're paying a debit, right, over here. And the question is, maybe, how would this look like after expiration? And so this first payout diagram just assumes that implied volatilities are going to be the same as they are. Okay, let's come back here a little bit. We know here that the July 185 put is going to expire July 22nd, but on July 22nd, the August 5th put still will have value, right? Because that one doesn't expire on the same day. That one will expire August 5th. So on July 22nd, that's when this strategy really ends. Because after that, this option no longer will exist. You no longer have a calendar spread. It's either that option will be either in the money or out of the money. So it'll either be worthless or it's going to be in the money and it'll be worth whatever the difference is between stock price and strike price. So that one will cease to exist. This one will continue. But since the strategy is basically over July 22nd, what we're going to do is look at the payout diagram on July 22nd, right? And the first payout diagram we could see here, this is going to show us what your profit and loss is on expiration of July 22nd, depending where the stock is, assuming that the implied volatilities do not change. But we know that's not realistic, that the implied volatility will come in for that August 5th. So that option that you're long, that is going to drop, right? And you have to kind of then determine to what level will it drop to. right? We could look at historicals and see where does it tend to go. So let me just maybe bring up another Market Chameleon. We'll see what it tends to drop to. I think actually I have it here. So actually I don't have to even move it. So look, we could look up the IV. So where does usually the spread gets priced? And that's here in the IV Theo. So what this IV Theo is doing is saying in the last 4 years, with Netflix about to report earnings, with, at the end of the day, we go back and look at what the options look like for a similar spread. We look at the snapshots, and then we say, okay, based on where the implied vols were for similar option, right? Similar option, what is the implied value of this spread? So we could see here, on average, implied value is $1.44. So today, it's above the average, in between the range, right? But above the average. So whatever you're paying, you're paying a little bit higher than historical levels. And here we could go to our payout diagram. And this payout diagram actually looks at what the graph looks like, assuming, that the implied volatilities revert to their median after earnings. So this is what that chart looks like. So here you could see if the stock at 185, that's your best scenario, because that's right at the short strike that's expiring, and your long strike, will have the most premium that's going out. So 185 is your sweet spot. And here you could see anywhere in here, that's where you stand to make. Out here, you will lose, right? So that's what it looks like. And we could plot actually the last 12 moves and reload chart. And we could see the last 12 moves, percentage moves. You could see a lot of them did end up in that green area, but we've had some, depending what you think, if there's going to be a big move, then it could land outside here. So this is kind of a way to quickly take a look at your potential profit and losses, right, on that spread. This is assuming over here, at expiration, your July 22nd option, all implied vols go to 0. Obviously, that's at expiration. And your option 2 goes back to the average IV of what that option looks like moving out of earnings. Okay, so here's the current implied vol. This is where it looks like at expiration. Okay. So was there another question to that, Will?
No, that was it. He just wanted you to look at it. Awesome job, my friend. Thank you very much.
Yeah. And you can see that's a play thinking that it's not going to move that much, right? And really your ideal price is 185, right? So here, what you're saying is that it has a good chance to be like right at 185. That's your sweet spot, but you're really betting that it's going to be somewhere in here, right? In here, in that range.
Perfect.
All right.
Well, thanks for another great show, my friend.
All right. Thanks everyone for joining. Everyone stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, chameleons. Thanks, Steve. Bye.
Bye.